So based off of how the daily chart is setting up, the game plan is going to be very simple to make money heading into tomorrow. I'm going to be giving you the new key levels of interest where I'm planning to buy call options, and then I'm going to be giving you the new key levels of interest where I'm planning to buy put options. I'm going to show you how I'm planning to make money both ways trading in the market tomorrow. I'm going to walk you through this step by step. This is going to be a very simple money-making game plan that should play out phenomenally heading into tomorrow. In terms of today, the game plan that I gave you last night was spot on. I told you the SPY was likely going to sell off first. Then once we drop back down to fill the gap that's waiting to fill below at that 567.80, that's going to be the first level to be buying call options on the SPY. I did end up using the gap reversal trading strategy. I did end up using the 30-minute trading strategy. I'm going to walk you through the pattern. During the power hour trading session, I had a win on these SPX calls. I bought 5,700 SPX strike at the exact lows at 95 cents a contract, and I sold towards the exact peak at 3:54 p.m. I sold all my call options literally at the peak. And these SPX calls, I got out at 630, making a 630% profit return. And then I also made a 100% return on SPY calls. And then I made another 200% return on SPY calls. I'm going to walk you through the trades that I ended up making today. In terms of percentage wise, it was an absolutely phenomenal day, especially during that power hour trading session. So in terms of the SPY, let's get straight into the analysis. This is going to be very simple heading into tomorrow. Based off the daily chart pattern, the main focus is going to be to buy call options on the SPY. And I'm going to give you two main levels. The first level is going to be the previous closing price, 560.70. If the market is opening up flat, or if we're having a small gap up, I'm going to be very interested in buying call options at 560.70. Now, if the SPY gaps up, if we are having a decent gap up, opening up higher than 567.80, is likely just going to keep on running, right? So in terms of a key resistance level, this is only if SPY gaps up, right? So if SPY's gapping up and I'm seeing 568.75, why is it going to be 560.80.75? Because we have some resistance here towards 568.30 to 568.70, right? And as you can see on these 30-minute candles, when the SPY breaks above this lower part of the candle here, 568.70, 568.70, 568.70, it tends to have a massive quick spike to 571 to 571.60, right? That's going to be your make or break resistance level. If we gap up, I'm very interested in buying call options at the higher levels, only if we are gapping up 568.30 to 568.60. If we are opening up flat or having a very small gap up, I'm going to be looking at the previous closing price. Now, in terms of the last level for call options, if we are opening up flat, or if we're having a small gap down, or if we're just reacting bearish in general towards those zones that I gave you, those previous levels, the next level for calls is going to be 566 to 565 key support. That's your make or break support. The gap breakdown level is at 565. Bulls are in full fucking control heading into tomorrow based off of what I'm seeing on the daily chart pattern. For the bears to take full control, we need to go under 565 and we need to maintain under 565. If we have a small drop under 565 and it keeps on bouncing, forming support above 565, it's going to be overall bullish day. Now, that's going to be the final zone for calls. The lowest zone for calls is going to be the 566 to 565 overall range. Use those fucking levels. Wait for the proper 30-minute confirmations. Use the analysis that I just gave you. You should not have a problem making money heading into tomorrow. In terms of how I came up with this, it was using the daily chart. The same way I came up with yesterday's levels along with the 10-day 30-minute chart. So in terms of the daily chart, what it is that I'm looking at, as you can see right here, the SPY has these three green trend reversal candlesticks. The SPY has these three green trend reversal candlesticks, and it's recently happening. In terms of capturing trends and capturing patterns, they tend to work best when they recently happen. In terms of recently happening, that could be ideally within the past 10 days, right? So there's this very recent pattern that I want to point out here. You have these three green trend reversal candlesticks. You have these three green trend reversal candlesticks, right? It looks very similar, not exactly identical, History repeats in similar fucking cycles, right? And then you have this red candlestick in the middle. Then you have this red candlestick in the middle. What happens next day? Next day, if we are holding that previous fucking closing price, the SPY is going to have a massive breakout. So like I said, if we're opening up flat and we're just holding that previous closing price, it's going to be ideal to try to buy call options at the 567.80. For the massive breakout, all we got to do is break above 568.30 to 568.70. From there, we have a smooth ride to 571.60. So that's the overall game plan if we're open up towards flat. Now, in terms of other daily chart patterns that I'm seeing, and when you're looking at the daily chart, you can also look at SPX. SPX is going to show you things that SPY doesn't show you, and then same thing, SPY is going to show you things that SPX isn't going to show you, right? I'm telling you, it's very wise to be watching the candlesticks on the time frames that work best for you. With SPY and SPX, watch both. You're going to see a lot of similarities. They don't look exactly the same at times, right? So just keep an eye on that, man, because I'm telling you, if you look at the daily chart in SPX, it's so much more clearer in terms of the daily candles that I'm seeing. But I wanted to mention SPY first, right? So in terms of, SPY and SPX, I mainly only trade that past 3:30 p.m. when the contracts get cheap. But in terms of other patterns that I'm seeing, this is where if you look at this red candlestick on the daily chart right here, and then you look at, this red candlestick on the daily chart right here, if it gaps up, it's going to be super bullish, right? And then in terms of how it reacted right here, very similar candlestick and a gap down, very similar candlestick and a gap down, right? So you have this green candle, this green candle, this red candle, this red candle. And then, the next day it bottoms slightly under the low of day. So that could be another thesis where it bottoms slightly under the low of day, which would be 566 to that 565 range, right? So I'm showing you two daily patterns, right? And then in terms of the other daily pattern, this is what I wanted to point out as well. You have this red candlestick in the middle. You have this red candlestick in the middle. Very similar. If it gaps up, it's just going to keep on fucking going, right? So another thing, if we gap up heading into tomorrow and you're seeing floors, you're seeing bullish 30-minute candlestick confirmations at 568.30 to 568.75, we're rocketing the fucking 571.60 if we gap up, right? So in terms of that resistance breakout where we're not going to be buying towards those lower levels, previous closing price, and then the lower zone 566, 565, like I said, if we are gapping the fuck up, it's going to run, and that's when you should be focused on buying towards the resistance and not towards the lower levels, right? And then in terms of this other pattern that I'm seeing, you have this red candlestick in the middle, and then you have this red candlestick in the middle. Next day, a small drop under the previous day lows, a small drop under the previous day lows, and if that occurs, it's going to bottom towards the wicks. You have all these wicks on the daily chart at this 565 to 566. Those are the two game plans heading into tomorrow. In terms of buying towards the upper levels, if we're opening up flat, show some interest in the previous closing price. If we're gapping up, show interest in the higher levels, 568.30 to 568.70. If we are opening up flat and we're not reacting bullish at the previous closing price, then buy the fucking calls at 565 to 560.6. If you use this game plan, you should not have a problem making money heading into tomorrow, man. I used the game plan yesterday that I posted. I fucking told you. The previous closing price is going to be the first level to buy call options. I told you I'm against buying fucking calls at these high levels. It's going to reverse. It's going to sell off, right? So when the SPY hit 567.82, I was killing it during the power hour trading session. I had some small L's before then and, just duds of a trade where I just got in and got out very, very quickly. But like I said, from the percentage gain wise, if you followed the trades, you should have been green on the overall day, man. If you have a 600% win and you are sized in accordingly, right? You're taking the proper position sizes. You can literally lose 5 fucking trades in a row and still be green in that situation. If I enter 2 fucking trades, one expires fucking worthless and one goes up 110%, I'm green on the fucking day. It's risk management 101, man. It's a percentages game. During the power hour trading session, I ran it up over 700 fucking percent on these 3 trades that I ended up making. So I'm going to break that down to you, man. But look, that's the fucking game plan for calls. Now, in terms of the game plan for puts, I'm seeing, possibilities. So in terms of this daily pattern, if the SPY is just holding the previous closing price and we're not dropping much under, there's going to likely be a good opportunity for put options later on throughout the day. In terms of the levels for put options, right? And this is mainly going to be focused if the SPY is bottoming at the previous closing price, right? So if we're bottoming at the previous closing price, opening up flat, I'm mainly going to be interested in puts at these higher levels. If the SPY is having a nice gap up, I'm not going to be too interested in puts. If the SPY is dropping and selling off, I'm not going to be too interested in puts. So this is mainly if we're just kind of opening up flat. But the key levels of interest to be buying put options are going to maintain the upper resistance. We have a gap that's waiting to fill above at 572.98. We have a gap that's waiting to fill above at 573.80. I'm very interested in using the gap reversal strategy at those two fucking levels, along with the upper levels. 575 was the recent extended hours all-time highs, and then 2 points above that, measuring the move where we've been crashing from all-time highs when SPY gets a new all-time high, 577. Those are going to be the levels for put options. Use the 30-minute candlestick confirmations. In terms of why I was so fucking bullish during the power hour trading session, I had planned a night before explaining to you on the daily chart pattern where the SPY is likely going to try to spike once we get to the lower calls. So if the SPY is selling all throughout the day, I told you I'm very interested in buying calls. In terms of the first level, it's going to be at the gap at 560.70.82. The exact bottom ended up being towards this 30-minute candlestick strong support right here. You got a lot of support on the 30-minute chart if you look very, very clearly at this 566.50 to overall 566 range, right? So with that being said, in terms of the main daily chart pattern that I was seeing, and this has occurred a lot throughout the past 10-day, 30-minute chart, you have these two massive red bearish 30-minute candlesticks, and then the SPY bottoms out and it starts flipping bullish. You have these two massive red bearish 30-minute candlesticks, and then the SPY bottoms out, starts to go bullish, and it keeps on bottoming towards the low of this big red bearish candle, towards this big red bearish candle. That similar pattern has happened many times throughout the overall 10-day, 30-minute chart. You can see right here, SPY recently gapped down from the same level. SPY recently gapped down from the same level. When did it start to have a short-term bottom? Red bearish 30-minute confirmation, red bearish 30-minute confirmation. You have an hour of very bearish confirmations, an hour of very bearish confirmations. And then if the SPY is maintaining support on that 1 to 5 minute at that previous 30-minute low, it's going to be nothing but call options and buy the fucking dips along with the gap reversal fucking strategy. It doesn't have to be aligned exactly at the fucking gap if we have the 30-minute confirmations in our favor on the 30-minute candlestick chart, right? So that was the overall reasoning behind the call options on the SPY. I mean, you could see again, this is just another situation, man. You have an hour of downtrend, and then on the 1 minute to 5 minute chart, on the new 30-minute candlestick opening, if you're seeing the SPY bottom at the previous 30-minute and it's bottoming towards these wicks, right? It happens so many fucking times throughout the past 10-day, 30-minute chart. So that was the strong reasoning behind calls, you know, using that overall strategy with the gap reversal and the 30-minute candlestick. Just with that understanding, if we're maintaining this 566.50 to this previous low right here, it's gonna start to bounce. And also the 1 minute chart. The 1 minute time frame was very bullish in my eyes. You have this gap that's waiting to fill above at 570.20. Is very likely we're gonna fill that fucking gap tomorrow. There's this intraday gap right here at 570.20. It would not shock or surprise me if that gap fucking fills. I'm telling you, man, we're coming in hot with fucking call options tomorrow. We're going to use the confirmations. We're going to fucking bank on these calls, man. The main focus tomorrow is buying call options. So just keep that in mind. And then in terms of the puts, I gave you the best levels, but it's mainly if SPY's just opening up flat for the puts. If we gap up, very bullish overall day, go with the upper resistance on the calls. So those are the main reasons, man. Just looking at this 1 minute chart, how it was setting up, it was very bullish. It was consistently bottoming, consistently forming higher support. In terms of the overall trades, like I said, man, we absolutely fucking crushed it. I'm going to walk you through this here. So like I said, before this, I did have a loss and I had 2 duds, but nothing, you know, too crazy, because in terms of the power hour trading session, it was 600% fucking gains, 100% gain, 200% fucking gain. If you just do the math and size accordingly, it outweighs any fucking losses before then, man. So with that being said, in terms of the main trades, I'm going to be breaking down the power hour trading session, man. It's very important that you save some capital to trade with towards the power hour trading session, because this is the best time to be trading during the day. This is when you can put in $50 to $100 in SPX and flip it to $300 to $500 to $1,000 at the speed of fucking light in less than 30 minutes. This is when you can outperform anyone it is that you know as a trader. So you tell me, man, who the fuck do you know is making trades like these, man? Drop a single fucking trader that you know of is trading exactly like this, man. I'm going to show you. This is how I traded the power hour trading session during the day. So I ended up buying, this is power hour trading session, starts at 3 p.m., right? This is the best time to be trading on the overall day. Let's buy SPY 568 calls at 38 cents a contract. I bought these calls at 38 cents and I explained to you the reasoning why. And then in terms of the analysis, you can see I'm explaining to everyone in terms of what it is that I'm seeing, right? So in terms of the 30-minute, I was expecting it to close very strong on the green 30-minute candlestick and to go to 569 at the bare minimum, which was towards the exact highs. Also made it very clear on what I was seeing on the 1-minute chart. This was a 1-minute candlestick on the SPY. So basically, in terms of the SPY, if it breaks above this 567.80, it's going to start to rocket and go straight up towards this 569 level, right? So I was explaining a lot of the reasoning behind the trade. And then in terms of, where I ended up exiting that trade, I sold it at 71 cents. And then in terms of SPX, we wait until the very end to buy SPX. So I got in the SPY calls at 3 p.m. The plan was to hold towards the close. And then in terms of the SPX, I've started buying 5705 SPX calls at 110 cents. I exited these at 200 a contract for 100% profit return nearly. And then in terms of adding, I did end up averaging my cost down on this specific trade on the 568 calls that I got at 38 cents. I ended up adding at 28 cents a contract, getting a very good average at 34 cents on that. And I sold it at 71 cents a contract. And then in terms of the next trade, this is fucking phenomenal, man. So if you're seeing me trade during the power hour, and I'm on the same fucking side of the trade, and I'm making 2 or 3 trades, it's usually going to get better and better towards the very end, man. Once the contracts get extremely cheap on SPX. So like if you're seeing me in an SPX trade at 3:30 p.m. on the same side, and it's not working out, or if it's not doing much, or even if it's up a little bit, and then you see me enter another strike towards like 3:45, 3:50 p.m. towards the key algorithm, that play is likely going to be the best fucking play of the day. I'm telling you, in terms of trading, the later you wait to trade, the better. I'm telling you, man, if you're seeing me enter 2 to 3 strikes on the same fucking side, the best play of the fucking day is going to be the second and third strike, man. Likely the third strike. I'm telling you, it only gets better towards the fucking end. I'm buying a strike that is literally closer to the fucking money at a lower price than the previous fucking strike. I bought these 5700 calls at 95 cents a contract, right? These 5705 calls I got into early at 110 cents. They went to like 20 cents. I kept them. I fucking held and I sold at 200. I don't use stop losses. I'll sell the move at some times, but it made sense to hold because I was playing for a strong fucking close. And I know that SPY could have closed above 569 easily. So I told myself, I'll hold till fucking close. And if this one doesn't work out, it's $100 risk a contract. I'll buy another fucking contract. One of the contracts is going to go up 200% at the bare fucking minimum. And then you're going to have plays that go up 500, 1,000%. But if you're not willing to risk $100 on an SPX trade, you're not going to be able to make those 500% to 1,000% gains, right? So all 3 fucking strikes worked. SPY 568 calls from 28 cents to 71 cents. SPX 5705 calls from 110 cents to 20 cents, sold at 200. And then in terms of the other fucking trade, SPX 5700 calls, 95 cents, sold at 629 cents. All 3 of the fucking strikes worked. And I sold at the exact fucking peak at 3:54 p.m. Sold at 629. Sold at 71, man. I fucking crushed it, man. And then I had a small loss on SPX after that. And then I had a very nice 200% win on these SPY calls. I got back in on SPY 568 calls at 10 cents. And then during the after hours trading session, I got out at 30 cents a contract for a 200% profit return, man. So this is a percentage gain, man. This is all a fucking percentage gain. You can put in your max risk per trade at the very fucking most. These are the cheapest, lowest risk contracts to be fucking buying. And these are the ones that are going to go up the biggest percentage gains within the fucking market. You could be risking $100 to be making $300, $500, $700, and you do not need a fucking stop loss to risk $100 on a fucking trade. Just let them expire worthless if you're trading during that power hour trading session, man. So those were the plays on SPX, man. For those of you who are serious about making money, if you want to join my secured private trading organization, it's going to be the first link down below within the description. You will gain access to our real-time trade alerts, to our real-time zero-day options trading alert system. We are known for buying cheap, far low risk, far out of the money option contracts, typically going 3 to 5 strikes out at times, very far out of the money, very cheap, very low risk. You can put in your max risk per trade at the very most. We don't use stop losses. You can let the trades expire worthless, or you can sell the move. If you're down 30, 40, 50% and you're seeing strong reasonings that's not going to go in your favor, then just cut the loss if you like, right? Sometimes I'll sell the moves. Sometimes I'll let the contracts expire worthless. There's no need to use a stop loss with this strategy, where in terms of you're putting your max risk per trade at the very most into these overall trades, right? There's no reason for a stop loss. Also, I'm against stop losses. I do not like or use stop losses. In terms of selling the moves, I prefer to see how it reacts at my key levels, right? So with that being said, man, we sell the moves, or we just let the contracts expire worthless, right? And in terms of the max risk, what you're putting into the contracts is the most you can lose in terms of the trading options, right? That's the beauty of options. You know exactly how much you're going to lose when you take the trade. Now, in terms of some background to the system, we are known for adding to winners. When we are up a little bit, 5, 10, 15, 20%, very small gains for us. Like I said, SPX got it at 95 cents, sold at 630. So if I'm paying 95 and I'm selling at 630, I just made $530. Do you think any other trades, any other losses before me is going to affect me on the day? No, absolutely fucking not, man. You can have literally 100% losses before that, and you'll still be green on the overall day in a sense. So that's the beauty of trading far the money option contracts. The biggest percentage gains within the market, the highest risk to reward within the market, the lowest barrier to entry. It's great for small accounts, and it's great for rich people who prefer to risk less and make more. But you have to know how to trade this style, and you have to typically hold your trades longer than the scalpers who literally just get in and out within seconds, right? Unless you're just trading power hour. During power hour, you don't have to hold too long to make serious gains, which is why I would question anyone that you know of, if they're not making big gains and they're just getting in and out very, very quickly. Why aren't they doing this during power hour? This is the best fucking strategy you can do during the power hour trading session if you are trading with real money, right? I'm not going to be going over prop firms or anything like that. That's a whole separate video, right? But what we do is we trade far the money option contracts. We're known for selling deep the money for the biggest percentage gains. And like I said, man, we set profit stops. When we're up 5, 10, 15, 20%, we set profit stops. A profit stop is going to ensure that we do not go green to red on a trade. If you are green on a trade, if you are up on a trade and you set a profit stop, that means that you get stopped out for profits and you don't flip fucking red. If you set a stop loss, that means you get stopped out for a fucking loss. Another reason to not use a stop loss is it has the word loss in it. I don't like to fucking lose, right? So fuck the stop loss. Sell the fucking moves if you think it's not going to work against you, if you're seeing confirmations, or just let the fucking trade expire worthless. You have the entire day for the contracts to go in the fucking money. I'm telling you, man, on these SPX trades, I was down like 80% on my first SPX trade. I sold it for 100% profit return. I didn't feel the need to use a stop loss because on this specific play, it didn't make any fucking sense for me to sell the move, to sell for an 80% loss on that trade, because I was playing for a strong close. If I'm playing for a strong close, that means I hold until the fucking close, right? Unless I'm seeing a strong reason to be selling when I'm up, not when I'm down, right? And if I'm down a fuck ton, I don't like averaging my cost down. You see what I did? I could have added to the 507.05 SPX calls. I could have, right? But instead, I picked up a new strike. I picked up a new fucking strike, man. And typically on my third fucking strike in that situation, every single fucking strike worked and went in the fucking money and banked on that. That's the beauty of it, man. I had 3 fucking strikes. All of them worked, but the one that went up the most and the one that was towards the exact bottom was the third fucking strike. So in terms of position sizing in that situation, when I'm playing for a one-sided 30-minute candlestick and I'm in 2 to 3 strikes, I will typically look to size in a little bit heavier on the second and third strike, especially if I'm in a 3-strike situation. But the point is, all 3 of the strikes worked, but I only needed one of them to work in that situation, man. All I needed was one 300% gainer to make money in that situation, and I had a 630% gainer. So with that being said, man, we set profit stops to ensure that we do not go green to red. If you set a profit stop, that means that you get stopped out for green for profits, right? Not for losses. And then as the trade's working in our favor, we sell the moves and we move the profit stop up. You want to move your profit stop up to ensure that if the market has a big move against your trade, you're going to be stopped out for the bulk of the profits and not just overall small green on the trade, right? And the reason to adding to winners is because when we win, we tend to win big, and adding to winners tends to work best. Because like I said, when we're up a little bit and we see a winning confirmation, it's a great reason to add for a win. If we're up 5, 10, 15, 20%, we're getting winning confirmation. We could be seeing 100, 200, 300% depending on the time of day, right? So it makes sense to add to the winners. I prefer typically not to add to losers, mainly because I could just get a new strike. Why the fuck would I want to add to a loss? It's just going further and further out of the money and the theta, and it's going to be harder for that trade to overall profit when I could just pick up a new fucking strike. And that new fucking strike, if I time it well, I can get in towards the exact fucking bottom and make the biggest fucking percentage gains and recoup that loss and more, man. Like I'm saying, you didn't see me add into 5705 calls because I'm looking at this and I'm saying a 5-point strike closer to the money is cheaper than my previous fucking calls. Why the fuck would I add to those calls? Those are going to be more risky now. There's barely any fucking time left on the fucking clock. I'll just go a little bit closer in the money with no time left. Buy these at the fucking lows, feel very fucking safe, and do that in that situation. Now, if you have multiple accounts, in a sense, and you didn't want to average, you can pick up that same strike in another account. That's another strategy, right? Or you can just add very, very lightly, and then you could put more on the new strike. There's a lot of different strategies you can do, right? But that's how I kind of thought about it. So if you're serious about making fucking money, it's the first link down below within the description. We have a 90% plus success rate doing this. And I'm telling you, we are printing at the speed of fucking light, buying cheap, far low risk out of money option contracts. You're not going to see anybody else out there trading like this. I'm telling you, man, who the fuck do you know is doing this, man? Like, do you understand? Every single strike during power hour hits. That makes up for any losses before with proper risk management. And I'm telling you, man, like, it just goes to show you, with this system, with this strategy, the win rate does not matter. It's irrelevant in terms of getting better and improving. Like, yeah, improve the win rate and get better, but it just doesn't fucking matter, man. Risk management is the name of the fucking game, along with understanding the strike prices. It made no fucking sense for me to average down my losses in a sense. So I just focused on picking up a new strike, and that was for SPX. For the SPY calls, it made sense to average my costs down a little bit because those just made sense to go very deep in the money. And I'm saying this is a no-brainer. It's only 10 cents for my initial entry. I'm going to add to those. But the SPX play didn't make sense to average my cost down. Now, in terms of another situation, if you didn't want to average your cost down, if you're trading multiple accounts, it could have made sense to buy, both strikes in a sense, to buy the same strike you were already in another account. That can make sense. But like I said, if you want, you could take a small little average down and you could take some bigger size on the new strike. But all three fucking strikes hit. But like I said, man, we don't need them to fucking hit, man. These plays during power hour are going up multi 100% profit returns at times. Every single month, we hit 1000% gainers. That means we're selling for 1000% gains. And every single month, we're in multiple trades where if you leave runners, right, you can make 1000% returns on these overall trades, especially in the morning overall trades and the power hour trades. But I'm telling you, man, the best time to trade is the power hour trading session. All you have to do is master the last hour, ideally the last 30 minutes for SP fucking X, and that's it. That's all you fucking need within this market. You need one simple system that works, but you have to understand in terms of the market conditions and market environment when it's going to overall work, right? The system is not always going to present itself. So you have to have that awareness, that third eye open, and be very, very self-aware and self-disciplined to just do it when it's going to work, or you're going to lose in that situation, right? If it's not there, if it disappears, then just wait for it to fucking come back. It'll come back. So with that being said, man, it's very simple, man. I'm telling you, the power hour trading session is what works best for me because all of the candlesticks have already formed, man. The bull and bear traps have been created for the day. In terms of trading the most volatile times of the day, market open and power hour are the most volatile times of the overall day. Market open, the market can trade sideways. Puts and calls can both get fucked, right? It could be extremely choppy in a sense, or it can just have a big one-sided move trend day throughout the day where you can just be, in that situation. But in terms of trading during power hour, the chart has already developed. The story has already unfolded. It's very easy to see the fucking plot when it already is fucking created, man. I'm telling you, it's very, very easy to trade if you just wait till the very fucking end of the day. It gives you so much time to see the market, to observe what's going on, to observe the price action, to have the best fucking plan. And I'm telling you, you get to see the chart fully fucking developed. Like I said, man, I had a key level at 567.80, and I'm not going to be buying it at my key level exactly. That's just a key level of interest. If I'm seeing a recent on the 30-minute chart, 1 hour slanted trend, 1 hour slanted fucking trend. Okay, if we're bottoming towards 1 minute, 5-minute chart at the previous 30-minute lows, buy the fucking calls, buy the fucking calls, buy the fucking calls at the fucking dips. So fucking simple, man. You just gotta wait. The market's gonna paint a fucking picture. It's gonna paint a story, and you gotta trade it when it's a work of fucking art. When it looks so predictable, when it's a no-brainer. It should be so simple and so beginner-based. In a sense, people, once they start to figure it out, They should be like, dude, this is so simple. This is so easy. I see exactly what is interesting. This is like beginner level. But I'm telling you, what's not beginner level is to be disciplined and to wait for all of this to happen, for the market to paint that perfect picture, that work of art. And I'm telling you, that's what it is that we're looking for. You just have to be very patient, man. It's very easy to develop this discipline when you're typically just not even trading during the market open trading session. I like to just wait in terms of my personal trading. Like I said, in Team Roar, I will follow some of the morning trades at times if it aligns in terms of with what it is that I'm seeing, right? But in terms of my own personal trading, it's mainly just towards that middle of the day, but power hour trading session, man. You need to be saving your capital for the power trading session. This is when the contracts are getting ready to expire worthless. They are so fucking cheap. You don't even have to go that far out of the money with not much time left. A big move is going to be happening. 340, 345, 350, 355 p.m. Massive fucking moves are going to be happening. You capture that 30-minute candlestick, whether it's going to close bullish or fucking bearish, play it outside. You can even play it both ways in certain situations. And I'm telling you, this is the best risk to reward and the highest percentage gains in the overall market is going to be towards that power hour trading session. And it's the least amount of time. So like I said, man, if you don't even hold your trades for a fucking long period of time, just trade during the power hour trading session. It's so fucking easy to trade during this time once you understand how it works. But there's a lot of complexities, man, in terms of SPX. Like, you have to be on the fucking dot, man. On SPX, you have to time it fucking perfectly if you're going to be trading during power hour. We're going to wait past 3:30 p.m. when it becomes cheap. We're not going to pay more and risk more. It doesn't make any fucking sense. We could trade SPY before then. SPY is a lot easier to just kind of hold, and you could do a small average down. No big deal, right? With SPY, you have plenty of fucking time. SPX is a different beast. You have to time it perfectly. If it does not work out, then you could try one more trade on it, because the trades on SPX, they can go 300 to 500%. Another beauty of SPX is it's going to create trades in a market that you cannot do with SPY. SPY does not have that middle strike. Every once in a while, you'll see on the option chain, it does have that middle strike, right? So like 566, 566.50, 567, it will have that middle strike. Rarely, every once in a while. SPX, it always has that middle fucking strike. That middle strike is a money fucking maker. You saw what I did on the 5705. It didn't work out. I tried the middle strike. It didn't work out. So then I went with the one closer in the money, right? The point is, that middle strike is going to put you in trades that SPY cannot put you in, man. To be buying these SPX fucking calls, pennies on the fucking dollars, man. I'm telling you, it's fucking crazy what you can do with that strike in the middle. 5700, 5705, 5710, right? That middle strike is a fucking game changer once you understand how SPX and the overall market works. So for those of you who are serious about trading with us, it's the first link down below within the description, man. I'm telling you, who the fuck you know is making trades like this on SP fucking X, man.